Well, I think that if you look at the M2 money supply in the United States in the last month, it actually went negative on a year-over-year basis. And historically, when that happens, at some point, you will see that economic growth is going to slow down. In fact, the Atlanta Federal Reserve has a nowcast real GDP model, and they're looking for economic growth to be in the 1% range in the first quarter. So you're seeing some weakness there. You also heard today from the Federal Reserve that they're going to continue to raise short-term interest rates. So they're not going to give up their fight against inflation. So all these pressures, namely rising short-term interest rates and slower economic growth moving forward, do in fact raise the risk that we can certainly move into at least a mild recession. I say mild because balance sheets for consumers and businesses are still stronger than you'd normally see right before a recession. But economic growth in the United States is certainly going to be weaker in 2023 relative to 2022, because unlike in China, where Xi Jinping actually is now talking about stimulating consumer spending, in the United States, we're moving in the other direction. We know that we now have a debt ceiling coming up, and Republicans, again, I say this in a nonpartisan manner, are talking about slowing the growth of government spending. So all signs point in the direction of more restrictive monetary policy, potentially more restrictive fiscal policy, so we don't see any stimulus. And that's why economic growth is going to be slower. And given the fact that economic growth is not that rapid to begin with, it does increase the risk. But the good news is, I think if we do get a recession, it's probably going to be mild.